fear. Fear in the markets. You can smell it. You can see it. So what I'm going to do is I'm going to go through a few of them today. It's not going to be a massively long video because, like others, I too lose the will to live when faced with a video of like 30 minutes. As traders, we don't really have time. We want to look over it at a weekend, but do we really? So first of all, look, I'm looking at the FTSE. Wherever I look with the FTSE, whether it's on the chart or on the news or on the, oh my God, who's going to be the next Prime Minister? It doesn't matter, okay? The FTSE doesn't want to go up. It's tried its little hardest. But you can see here, this was a bearish pattern. And yesterday it followed through. Did we do any damage on the downside? No, not really. I don't think. So what I'll do is I'm going to put, love a fib retracement. I'm just going to put it on there like that. So we are below the 23.6. It's summer markets. FTSE doesn't usually lead the way. But I can see this coming down to the 38.2, which is coming in at 10,335. You've also got that moving average there coming in at 10,411. I don't know. It doesn't look well. But let's have a look at the other ones. The S&P, dear Lord. So I'm hearing lots of topping patterns and, the market's going to crash. I don't think it's going to crash in the summer months. Do I think it's not going to look very well? Yeah, I do. But it is resilient. You can't argue with the fact that this market does not want to go down. So you've got one or two things here at the moment that we look at. Markets go sideways before they resume the trend. The trend is most definitely up, and people will say it's been up for over 100 or nearly 200 years now. It has, but markets correct, and I think you have to be aware that they correct. Now, the pattern I'm seeing on the S&P is, if I just eyeball it, not as a technical analyst, but as a trader, I'm thinking, okay, well, look, we're not going to make any headway unless we get a close above this previous all-time high. That's coming in at 7624. We're at 7497. We're not that far away from it, but you're looking at all your indicators. Get out of my way. Looking at all your indicators turning bearish. At the moment, we are above the pivot at 4762. That's also the 9-day moving average, which is at 7483. Yesterday cuddled at 21-day moving average. That's coming in today at 7459. And you've got the S1 at 7415. Now, I know it's summer. I know it's summer break. But what you've got to do is it's got to make a break soon. Because if it doesn't, traders are going to get bored. And there's an old adage in trading. It's called, what don't go up goes down. It's that simple. If the buyers keep trying to further this along its little way and take out the previous all-time highs, if it don't do it, it's not going to do it. And you will find that they go, do you know what? It's normally up by the steps, down by the escalator. I'm going to get more value in selling this market than I am buying it. Traders, a lot of us like to think, or a lot of them like to think they're very intelligent beings. All you've got to do is look at the price. Look at the price, see what it's doing, see where the big levels are. But more importantly, watch for sentiment. That's it. That's the key to trading. It's market sentiment. Are the buyers going to be turned into spare ribs? Is this ripe for a corrective move lower, down to 7170? Yeah. 7120, even better. Then you'll see whether or not you're going to have buyers coming in to defend any attack by the sellers. Trading is 80% psychological. Don't forget that. 80%. And it's the psychology of traders' brains, and I would like to be in that trader brain. Why would I keep buying at the moment? So what we're doing is we're sitting on the sidelines. We're waiting. We want to know if it's going to take out that all-time high and close above it. Then we go back in. Or we go back in on a correction. So that's my thing of the day. And, just watch this. It's really important. So I'm Carol Harmer. I own Charmer Trading. Good luck.